Gold at over $1,086 an ounce. What exactly is going on? We heard that India is buying 200 tons of gold and, of course, swapping $6.7 billion for 8% of annual production.
You know what's interesting about yesterday's stories for me is you've got these two stories that are complete bipolar opposites of each other. You've got India buying right at the top end of a cycle. They're buying a metal that has never been at this price, okay, in the hope that it'll go higher. And on the other end of the spectrum, you have Mr. Buffett with a sterling investment record, let's face it. I mean, you can go and compound his returns any way you want to. Those are some sterling results that he's achieved. And he goes and he buys a company and he spends probably some of the most money that he has done in the last 5 years, $26 billion US, to buy a business that is really into freight. So they run railroads in America, which means that you need to be able to move goods around America to make money out of this. Now, those are two completely different decisions and investment decisions. The one says, there's going to be an expansion at some point, and I want to be part of the expansion. And goodness knows this expansion is going to be better than what we've had before, and that's why I'm buying companies. And on the other end of the spectrum, you have people who are saying, the world's going to implode, the world's going to disappear the way in which we know it, the monetary systems that we have are going to disappear, so let's buy gold. Because the only other use for gold is jewelry, really, if you think about it. I mean, India generally uses a lot for jewelry, but not to this degree.
Well, obviously this is about diversifying their portfolio and perhaps getting out of dollars, but you mentioned something very interesting. Why buy at those levels? Because gold was trading at around $1,060 an ounce in yesterday's session before we heard the news that India was actually buying up bullion. On the other end, of course, we're also hearing that Asian countries have been trying to move away from the dollar. Is this it? Is this the moment where we are going to be seeing a massive shift from the dollar into other commodities like gold?
Put it to you this way. I mean, the greatest teacher that we have during recessions and booms as well is history. So if you go and you look at 100 years of economic policy making and decisions around economic policies and economic issues, you see that usually what happens is once you hit a recession and you hit the bottom end of a recession, there's a huge amount of decisions that get made by central bankers because they believe things are going to get even worse. So the fact that India has gone and bought gold at these levels, and it's not per se the Indians, it could have been anybody, it doesn't surprise me that these things will happen at these levels because it has happened before and it'll happen again and again because that's human nature.
Okay, well, with the dollar steady at 147, it's interesting because we saw it reach 150 last month, and that's when gold really enjoyed a lot of gains. And then during that time, it hit $1,072 an ounce, and then we thought, okay, this has definitely got to do with the dollar sell-off. Now we've got the dollar at 147, we've got gold at around $1,080 an ounce, and some traders are saying that the reason that the dollar is performing so well is ahead of that Fed meeting, and traders are just basically consolidating.
Think about it like this. If you're an investor and you had to go and invest your money today, and you're not even interested in buying equities, you just want to go and put it in the bank. That's all you. So you're looking for cash rates right around the globe. You can go and put your money in the States and you can earn a fairly meager interest rate. You know, I think in the order of about 0.25, maybe 0.50%, but to those likes. If you leave your money in South Africa or any other emerging market space, you're probably earning in excess of that. Repo in this country is sitting at about 7%, and you're probably sitting at 8 or 9%, if you're looking at cash rates in this country at this stage. Now, that is not a South African phenomenon, that's an emerging market phenomenon. And it's a Western phenomenon, not so much an American phenomenon at this stage. So money flows to where it can make a return. And that is what you're seeing happening. So if you look at the long-term trend as far as the dollar is concerned, don't worry about the short-term movements, because the short-term movements are people buying and selling and buying and selling, and that'll happen. But the long-term trend is for the dollar to weaken, and they're quite happy for the dollar to weaken because the main objective on a political front in America is to create jobs at this stage. And they will continue to weaken the dollar until they create the jobs that they need to create and until there's some robustness in the economy. And then at that point, they'll start hiking rates again. And remember that the Fed are inflation watchers. So when inflation starts ticking again in the country, which PPI for them is a negative space at this stage, once that starts happening, they start raising rates. But that picture can take a couple of years to play out. Again, history is a teacher here. If you go and you look at history, often after a recession, it takes a couple of years before these things to work themselves out. And you're sitting on the back end of the biggest post-World War II recession that America has faced. And hence, the recovery is going to take longer. But that doesn't mean we shouldn't be investing.
looking at the equity markets just very quickly, I get the sense that they've reached some kind of resistance and they're looking overbought, and now we are due for a pullback. Do you agree?
Well, the market has pulled back 5% from its high points, and you know what, it can pull back another 5% and another 5%, you know, so it could be down 15% from its low point, and it's still a buying opportunity because the market still provides you with some decent quality companies at reasonably good prices, and the question is, will we participate or won't we? So let's put the bets on the table. I'm with Mr. Buffett. Mr. Buffett seems to have got it right for many, many years. He's got a very strong value-based philosophy, hence I don't want to overpay for businesses, but when I'm at the bottom end of a cycle and I can buy businesses and really good businesses for cheap prices, surely that's very exciting. And I have to agree, why not buy good quality companies? Why buy gold at $1,080 an ounce?